Now to our first conversation. The insurance industry thrives on one key ingredient, and that's trust. In a sector built around promises for the future, ethical conduct and professional standards are vital for winning and keeping consumer confidence. As Nigeria's insurance market undergoes major reforms under the new Insurance Industry Reform Act, the conversation around integrity, transparency and accountability has never been more important. This morning we'll explore how ethical standards can drive growth, the role of the Nigerian Council of Registered Insurance Brokers in elevating professionalism. Well, join us for this conversation. We have Ekeoma Ezeibe. She's the incoming president, Nigeria Council of Registered Insurance Brokers. That's NCRIB. It's great to have you on the show, ma. Good morning.
Good morning, Ladi. Thank you for having me.
Yeah, and I guess congratulations. In order, at this point, this Friday, you are the incoming president of this great establishment, and you're the third female president. You'll be the third one in the 63 years.
Yes, indeed.
Wow. And you're the 23rd president incoming at this point. How does that feel?
Well, I somewhat feel fulfilled, and then I feel great too.
That's incredible.
And then I also feel have a sense of duty, and also a sense of responsibility, to be able to live up to all the expectations surrounding this upcoming part of my professional life.
It's quite interesting. In 63 years, you're the third female.
Yes, yes, indeed.
Wow. Congratulations.
Thank you very much, Ladi.
First off, let's kick off with the insurance reforms, at this point. First of all, the capital requirements. Last time we had this conversation, we didn't have the full details, but now we have, some more details. You see the requirements there. Minimum capital for non-life insurance, about 15 billion naira. Minimum capital for life assurance, that's about 10. Minimum capital for reinsurance, 35 billion naira. So talk to me about these requirements, and you definitely will have a lot of insurance companies now that will be trying to make this happen. I think they have about 1 year to do this.
Yes,
what are you seeing so far?
Yes, what we are seeing so far is that there is hope in the horizon. Yes, indeed, you have enumerated how it is in the Nigerian Insurance Industry Reform Act, and there's a second leg to it. Actually, what it says is 10 billion naira for 15 billion naira for non-life, 10 billion naira for life, and 35 million naira for reinsurance, and risk-based capital, whichever of the two is greater. And so what the law wants to see is that no insurance company is carrying on risks more than it can actually contain at each point in time. So whichever of those minimum capital or risk-based capital that you have is the one that will rule the day. And then, of course, what the regulator has done is to make it seamless. And the reason it will be seamless is the regulator is not interested in making insurance companies to fail, because if they fail, it will be the consumers that will have the backlash. Not just the consumers as well. The national economy will also see the backlash. So what the regulator has done, the National Insurance Commission, is to set up a committee headed by Mrs. Tony Charles, a director in the commission, to see to work insurance companies through this transition period to see that they achieve these things seamlessly. And so you are right in saying that they have a maximum of 1 year because the act has come into effect. And the law says maximum of 1 year after the law has taken effect. So that's what we have.
Right, and do you think the insurance companies have enough time to raise at this point, knowing fully well that we've seen the banks, some of them are still raising?
Yes, some of them are still raising, but I tell you, sometimes when you push someone to the wall, the person will then realize, oh, after all, I have this ability to do this. But when you keep postponing the evil day, then the people will start naturally being lax about doing that which they ought to do. And I think we have always expected this in the insurance industry. And so we're making, insurance companies are making every effort to make sure that they live up to it within the time given by the law. And they don't have any choice anyway, because it's already a law. It's embedded in the Nigerian Insurance Industry Reform Act. And that's why the regulator has a responsibility to make sure that they walk them through this path towards actualizing that.
Do you see big mergers and acquisitions coming?
That might be. That might just be because it will be good when you look at yourself, you advise yourself, instead of forced mergers and acquisition, you then know that this is actually the route to go within the 1 year period. So some of it might end up in mergers and acquisitions, but there are some that are already fully recapitalized. Yes.
All right. Do you see, definitely reforms, most of the time they can be quite painful.
Yes, indeed.
For, one party. Where do you see pain for consumers, the reforms we're seeing so far?
If you ask me, I don't even see any pain for the consumers, because what this act has done is to protect, give an oral protection for the consumers. And it is for them, really, that the increase in capitalization, was put into place, and for the national economy as well. So I don't see anything hurting them. The law has taken care of them in so many ways, that I can start enumerating right now, which is really good, because when they're happy, we're happy, and business is good.
So I guess no pain, for the consumer, and I guess when you have a claim, are you going to get, attended to immediately?
Of course,
and fast
of course,
with
yes.
reforms?
Of course, yes. Being a broker, I am exceedingly happy with what the law has done, because the broker is the professional insurance advisor to the consumers. And so when a claim is paid, and very quickly too, it is a validation of what the brokers do. Is a good testimonial for us as insurance brokers. And so what the law has done is this. The law says an insurance company has up to 60 days within which to pay a claim. And even the insurance companies, most of them don't even wait for up to 60 days before they know they have to pay that claim, because it's also an advertisement for them. And then the law also says if it is a reinsurance claim, then the 60 days will start counting from the time they have issued their discharge voucher, because reinsurance arrangement is slightly different from a direct insurance arrangement. The direct insurance arrangement starts counting from the day the claim is filed. And then what the law then went on further to give the consumers other recourse, assuming this fails, the 60-day fails, the consumer can, of course, by going through the courts, they can now get the courts to make the regulator, NICOM, to dip their hands into the statutory deposit of the insurance companies in order to satisfy that claim. And of course, the insurance company will then pay that back, because it is like a loan. And the law has gone further to establish a policyholders protection fund, which is a good thing. And this fund is derived from 0.25% of the premium due to insurance companies. And then the commission now sets up fund managers to fund it. And really, that fund is supposed to grow. It's an investment fund which is supposed to grow. And should any insurance company not be able, for reason of going underground, winding up, or reason of having the license withdrawn by the regulator, then the regulator can then pay claims from that fund. But then that insurance company will definitely pay back, whether your license has been withdrawn or whether the insurance company has gone under, because this holds a first line charge to the winding up process and the creditors, so that it can be put back and it keeps on growing. Actually, this has been the way it is in civilized jurisdictions, and we are civilized. So it's high time we took the whole bull by the horns and then instituted it into our law too. So these are all measures taken in by the regulator and this act, to make sure policyholders are protected. And so for us brokers, we are really happy, because either way, the claims will have to be paid. And in any case, the good thing is that with the recapitalization, we don't even need to have recourse to all of these measures, because when we have insurance companies that are stronger than they will more readily pay claims. And then we won't be talking about whether 60 days has passed, claims has not been paid, claims have not been paid, or policyholders' protection for having recourse to it.
All right, so is there anything in there for third-party claims?
Yes, it is, of course. Okay, what the motor third party has done is this. When I came here the last time, I did tell you the reason that motor third party and other compulsory insurances were instituted. It is to protect the duty of care that we owe amongst ourselves, so that we don't run our businesses and our affairs in a manner that we do not put in consideration to other people around us. And so with motor third party, what this new law has done is this. It has increased the benefit in motor third party to 2 million naira. And this 2 million naira would be either property damage, injury, or death. And then they've gone on further to protect unidentified drivers who knock down people, victims of unidentified drivers, by instituting a fund which is made up of, I think, about 0.5% of the profit of motor insurance from insurance companies. And that is where the regulator will dip its hands and pay victims of unidentified drivers. And so these are all the things that has been done, and which is very important. People don't even know it. With just 15,000 naira, basic, you will obtain a motor third party cover. And then with that, you have a certain appreciable measure of protection against people that you may knock down, injure, kill, or destroy their property.
So quite a lot, in there for everyone.
Yes.
At this point. And I did see something for regulation of intermediaries, ban on agents collecting premium. So I guess agents prohibited from collecting premiums on behalf of the insurer. Payments must go directly
to the insurer.
What does this change?
Okay, what it changes is this. Agents are usually the agents appointed by insurance companies. So the insurance companies are their principals, and so are directly responsible to them, although they are some form of intermediary. But they are not professional intermediaries like insurance brokers, who have gone through, the same type of educational and professional training like the insurance companies. Agents may not be insurance professionals, and more usually than not, they are not. And so before, they would collect insurance premiums, just like other agents can collect payments on behalf of their principals. But the law now does not allow them to do that. Payments are made directly to the insurance companies. And all of these are geared towards consumer protection, to make sure that the insurance company has received that premium.
So before now, were there issues, when the...
I wouldn't really know whether there were issues. Remember, I did say that the agents are agents of insurance companies. They are not agents to us. So they are accountable to the insurance companies that appointed them. So I wouldn't know as a broker.
Right. Yeah. All right, so what can we expect from the NCRIB going forward now with the reforms and you, the incoming president?
It's really interesting. The reason is interesting, especially for me. This, I don't know whether you've been following this. It was in 2016, actually, that the ministerial bill, consolidated insurance bill, there was a ministerial committee that was set up by the federal government. And then we went through all of that process, public hearing, all of that. And then it didn't see the light of the day. And in 2016, there was consolidated insurance bill again, a private member's bill. It didn't see in 2020, it didn't see the light of the day. Then in 2023, there was also a private member's bill, Honorable Darlington Wokocha, who saw it. We thought it was going to be signed by President Muhammadu Buhari. Unfortunately, it was one of the bills that were not signed at the time. And then Senator Adetokunbo Abiru came and took the bull by the horns. And maybe just as well it was not signed, because he brought in what he did, Senator Tokunbo Abiru did was to bring in a lot of contemporary issues into the bill that is now taking care of the way modern insurance should be practiced. And now it culminated into the Nigerian Insurance Industry Reform Act. All of the 9 years that all of these things happened, I had been at the front row on behalf of the Nigerian Council of Registered Insurance Brokers. And so it is an exciting time for me that at a time I'm going to take the mantle of leadership, the implementation of the law has now come. So it is something I look forward to, and every broker is excited about. Successive presidents had walked through all of these bills in the past 9 years, and more especially the outgoing president, who I had been going with, you know, in respect of the last bill that culminated into this act. And so it's an exciting time for brokers. Although when you ask me about challenges, we also have challenges in there. But are they challenges that we are prepared to take? Yes, they are challenges that we are prepared to take, because we have to brace up and operate much more professionally than we have done, because it is a contemporary bill. So we are contemporary professionals who are going to now operate along the lines of this fantastic bill. Fantastic act.
I guess that's a good place to anchor it, and congratulations again, Mrs. Ekeoma Ezeibe. She's the incoming president, Nigeria Council of Registered Insurance Brokers, NCRIB. Thank you so much for coming on the show today.
Thank you. You're welcome. Thank you so much for having me once more.
All right, we'll take a break now. When we come back, more conversations. We'll see what's playing out with the payment ecosystem in Nigeria. That's in a moment. Just stay with us.